Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Matthew Bartolini. He's the head of SPDR America's research over at State Street Global Advisors, and we are going to focus on managing your investment expectations into the midterms and beyond. I'm sure this is an exhausting subject that everyone's been dealing with, but let's talk about the probabilities right now for each party in the House and the Senate. What are you looking at?
So yeah, basically it's about an 80% probability that Democrats take control of the House, while it's actually an 80% probability that the Republicans take control of the Senate. But as we learned back in 2016 with the general elections, probabilities and predictions may not actually come to fruition, and it could actually be a completely different result than what we are expecting right now.
So what's it based on then, your probabilities?
So basically it's looking at the polls and the polling numbers that we have out there right now, as well as the election math. So basically there's only about 24 seats that need to be flipped within the House for the Democrats to actually take control of that. And conversely, it's basically a 52 to 48 lead for the Republicans in the Senate. So there's not that many seats up for grabs for the Democrats to take. There's a certain amount of them that are a coin flip right now, and that actually introduces some uncertainty, particularly like Texas. If that actually goes to a Democrat, that could be sort of a domino effect in other areas, and then you could end up maybe with a Democratic-controlled Congress, which we haven't had for some time.
Right. Well, so if a blue wave or a Democratic sweep were to hit, what are some of the opportunities that are out there?
Yeah, so I think one of the bigger ones is around healthcare. So they'll probably push for more affordability of healthcare for a lot of different people. That would benefit healthcare services firms because there'd be more insured people and there'd be less claims that have to be paid out for uninsured. Another area is within clean power. So I think you'd probably see the clean power plan come back, perhaps maybe even a carbon tax. So those firms that are innovating within clean power about renewables and solar would definitely be well positioned in this type of market.
And conversely, if there's a red wave?
Yeah, conversely, around the same idea, it'd be probably more fossil fuel generation. So think about energy producers and drillers, because you'd probably have more expansion and less regulation of drilling lands, particularly maybe in the deep sea. So I think oil drillers and producers would benefit from that perspective, but also you'd probably get tax reform 2.0. So that would benefit more domestically oriented segments like small caps and more sort of interest rate sensitive like banks.
Mm-hmm. And so to wrap up here, it seems as if the most probable event is going to be a split between the two. What happens with that scenario?
Yeah, so with a split Congress, I think there's one area where probably it's very bipartisan, and that'll be around infrastructure spending. So look for infrastructure spending to get done, and given that it's supposed to last a good 50 years, look for more adaptive or innovative technologies to be used from an infrastructure perspective. But honestly, one of the things is probably going to lead to more gridlock. There's a lot of decisions that need to be made, particularly around December 6th, where you need to pass another stopgap funding bill to fund the government. So that'll be brought into the headlines. So from our perspective, sort of having more of a defensive overlay into your equity positions will be beneficial heading into the fourth quarter.
I'm just surprised we're not more aggressive with infrastructure spending now. I mean, that creates jobs, that introduces money back into the economy. It's such a great job producer.
Yeah, I mean, even just look at some of our failing projects that we have now. I mean, rails and roads.
Well, we know.
That requires a lot of infrastructure spending. It does create jobs and creates a lot of different paying jobs, from low paying to high paying. And it's just necessary. I mean, just coming into the airport today in New York, you see all these different aspects that need enhancing. And I think it would benefit a lot of productivity in the U.S. as well.
Oh, yeah. The New York and New Jersey regional commuter certainly shares your pain. Thank you so much, Matthew, as always, for joining me. And thank you for joining me throughout the week. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.